A lot of people think there's a magic number that you're aiming for, and that's just not the case.
All right,
I'm ready.
We'll roll right into it. Frank via text is our first question. And he writes, I'm 5 years out from retirement. I feel like I should be doing something to get ready, but have no clue what. What do you recommend? Well, good for you, Frank, that this is the Get Ready for the Future show. So we're going to talk about getting ready for retirement, or as we like to say, reaching that level of financial independence. Maybe you decide to retire, or maybe you don't, but you know you can, right? But Frank obviously tells us he wants to retire, so he's getting ready, about 5 years out. I think the first thing I would say to you, Frank, is you need to worry about your mindset, or think about a change of mindset if it is needed. Because when you think about being 5 years out of retirement, most folks that come into our meeting rooms, when they initially begin the conversation about retirement, they are quick to ask us, here's what I have. Do I have enough to retire? Or how much do I need to retire? And we believe that is the wrong question and the wrong thing to focus on. The mindset change needs to be from assets to income, because retirement is essentially an income problem. And when your mindset is shifted from assets to income, you begin to focus on outcome. And I think that's important, Teresa, because up until now, and maybe even partially rightfully so, when you're accumulating wealth, you're looking at your rate of return, right?
Yes.
But rate of return matters less in retirement than the income you want.
Yes, I think it's important to have a strategy that works regardless of what the market is doing, but you also have to start by understanding your income needs. A lot of people think there's a magic number that you're aiming for, and that's just not the case. You've got to understand your need so that you know if you have enough assets to meet that need. And that's where I think that mindset shift will serve you well, because there's not just some natural number or magic number that if you get to it, you're solid.
Right.
Because what I might need in retirement might be very different from what you need, Scott.
Yep.
So there's not just a single number for that.
Yeah, because we are in the income planning process going to be layering in other sources of income. So the sources may be greatly different from one retiree to the next. The amount of those sources may be greatly different from one retiree to the next. And then the amount of income that is needed and wanted can be greatly different from one retiree to the next. So the asset level can be a very large range.
Yes.
For one client, $500,000, $600,000 might be enough for a successful retirement. For another client, it might need to be over $1 million or more.
Yes, I like to tell people, do you want to go to Paris, France or Paris, Arkansas? Because those are two totally different types of retirements. And I think, too, we can all agree that assets don't necessarily equal income. Some people will be very concerned about their net worth. Well, that includes your home. That includes, just anything that has value. But I could have a 200-pound chunk of gold. If I can't turn that into an income stream, it's not really useful for my retirement income plan. And that's where having the right strategy and the right mindset toward that strategy is important, because if you're just chasing return, it could come back to bite you in a down market.
Yeah, and listen, Frank, you're not alone in kind of feeling like you should be doing something to get ready, but not really knowing what you should be doing. And we do know from survey after survey after survey that it is a worrisome thing to be a few years out from retirement. I'm going to quote a couple of surveys here that we have in front of us, taken of pre-retirees. It's a Charles Schwab survey. So these are all people that are walking up on retirement just like Frank and maybe 5 years out. And that Schwab survey found that 57% of those pre-retirees surveyed are overwhelmed by determining how much they can spend in retirement. And a follow-up number there, 60% are worried about not getting, or the thought of not getting, a regular paycheck in retirement. And 64% are overwhelmed by not being able to maintain their current lifestyle or quality of life in retirement. So you're talking about well over half of the people who are getting ready to retire in this country that are concerned about how much they can spend, how are they going to replace a paycheck, and are they going to be able to maintain their current lifestyle.
And many of the studies we've read say that people don't have written plans.
Right.
So we have to wonder if there's a bit of a, kind of a combination of things happening there. If you don't have a plan, then how do you know? If you haven't done the math, how do you know? And let's be real, if you don't live in this world day to day like we do, where we're creating retirement income plans, every calculator out there on the internet has different math behind it. So you can get on one and it'll tell you you're good to go, but what are the parameters it's using? A lot of times those are very inaccurate based on what we've seen.
All right, so I'm going to follow up. You mentioned the people who have a plan. We've got that number too. This is a different study from Transamerica Center for Retirement Studies. It comes from the 23rd Annual Life in Retirement and came out last year. Few age 50-plus workers and retirees have a financial strategy for retirement in the form of a written plan. So 50 and older workers surveyed, 23% said they had a written plan. And of the retirees surveyed, only 19% had a written plan. So, Frank, what we're getting at here is you need a plan. It needs to be focused on income, not assets. So let's help you kind of think about some specifics here, because we've talked about it from a kind of a global or a 10,000-foot view. Let's dive in. So what have you done so far? I think that's the first question we would need to assess is, where are you on your asset level in your investments? What are you invested in? How much money are you currently contributing so we can make some assumptions about where you're going to be in 5 years from now? And then we need to analyze debt and expenses and your income. What does a successful retirement look like for Frank from an income perspective?
And then we take that, if you're working with us, and we go through our ready to retire process, because there are some unique risks that you're going to face in retirement. We've talked about them before, the 3 big risks, timing the market properly. What kind of market are you walking into? Making sure that you have regular, dependable income throughout your retirement. Making sure you have enough to cover inflation needs over time, because we all know, especially recently, inflation has been very impactful to our day-to-day. And then how do you not run out of money? There have been a number of surveys about that. People are more scared of running out of money than they are death. So we know that's a fear that people face, and that's a risk that you face, is running out of money with longevity being where it is. So do you have a strategy already in place to prepare for that? And if you're above 59 and a half, you might have the opportunity to start that plan now so that if you do retire into a down market, you're already ready for it.
So let's talk about those risks. You just talked about them. Inflation, sequence of return risk is the official
term.
title, but it's basically a market risk in retirement of what if you're invested in equities or invested in any kind of asset class that could go down in the short term in value, and you are selling those investments for income, it can rapidly accelerate the depletion of your assets depending on what market you retire into. And I'll tell you, Teresa and I don't know what market you're going to retire into. Nobody does. And if they say they do, they are making it up, because you don't know from day to day, from month to month, from year to year, when you retire, how do you know what the market's going to do in those immediate days, months, and years after you retire?
And I would say there are some that say, well, I'm just going to take all the risk off the table as I'm nearing retirement. I'm just going to take everything and put it in something safe. But again, we have inflation. So if you don't have a strategy to manage the risk that the market puts in there, you're going to set yourself for another risk, which is the inability to increase your income later. So you can't just say, I'm going to be super safe or I'm going to take tons of risk. There has to be a strategy. And we're not talking about the 4% rule. We're not talking about a 60-40 portfolio where you just kind of hope it all works out, because we've seen that not work.
Yeah. So our strategy, we call it the bucketing approach. When you think about taking income now from a conservative investment that's not going to lose money, it has little risk, maybe no risk to principal involved, that you're pulling from now, and then at the same time setting up other buckets or segments of investments that with each step down the time horizon takes on a little bit more risk, because obviously it's a risk-reward relationship in investing, so that your stock bucket, your growth bucket, is 15 years from now. So, and I think that always brings up something for, and Frank may be thinking this too, a lot of people when they get to retirement, they think if I take an equity loss, if we have a bear market and my investments go down 20%, I don't have time to recover because I'm about to retire. But retirement's not a full stop. It's a yield sign. So with a portion of your assets, you do have time. You're 40 years old on that bucket, right?
Yes. And if we're using that strategy and we think about like 2008, that's kind of the most recent recession that people who are listening have probably had some experience with. If you retired into 2008 and you were using this strategy that we have, it's now 15 years later. So your equity segments, if you were working with our team, would have had all of this time to recover. And if you look at where the market was at 2009 at its lowest point to where it is now, you'd be in pretty good shape if you had a similar market again.
Well, we're about 400% up from there.
Yeah.
According to the S&P 500, of course,
Right.
which is just an index. So the bottom line, Frank, again, shifting that mindset from assets to income and then creating a written plan with a financial advisor. Our process here is called the Ready to Retire process. And if you'd like to go through it, or if anybody listening or watching today needs that written plan, you're 5 years out from retirement, you're 10 years out from retirement, no matter how far off that date of financial independence is for you, creating a plan to get there and maintain it is vitally important. And it's easy to step into level one or step one of that process. All you have to do is reach out. You can email us, send it to show@getreadyforthefuture.com, or you can call us toll-free, 866-653-PLAN. That's 866-653-7526, and set up an appointment with a Gen Wealth financial advisor. That first appointment is complimentary. It doesn't cost you anything. It's just a conversation, really. We're going to ask you to bring some documents that are going to relate to where you are on your road to financial independence, and then we'll talk about our services and whether we're a fit and maybe create a written plan for you.